Good afternoon, everyone, and thank you for joining us. My name is Migdalia Gomez. I'm the AVP of Community Engagement at the Harvard University Employees Credit Union, and I will be today's presenter walking you through student loan repayment and refinancing. For those that may not be familiar, we at the Harvard University Employees Credit Union are Harvard's not-for-profit financial institution. Student loans, something very personal to me. I've had student loans. I used to work in student financial aid. I used to work for the state authority, so I have a lot of experience with student loans. And even with all that experience, things are changing quite a bit, as I'm sure you've seen on the news. And I'm going to do my best to cover very general overview of student loan repayment and refinancing. But I do want to say that because a lot of things are changing, we just all have to keep our eyes on the news to see what will happen in the next couple of weeks. But just to get us started, a little bit of logistics. I know folks are still logging on. Wanted to let you know we are doing this Zoom via webinar, which means I can't see you. So don't worry if you want to be off screen, you are. So no worries about that. If you want to have lunch or have there's background noise, absolutely no worries. We will not be able to hear you. We are going to use the Q&A instead of the chat feature today. I will be the one reviewing all the Q&A, so it's just much easier to have them all in one place versus chat. No, for any of you that have been on a very engaging Zoom before, the chat gets going and it's kind of hard to keep track of all of them. So that's why we will be using the Q&A. And just to make sure that you can hear me, that you know where the Q&A is, please let me know, where are you joining us from today? So that could be either the hospital that you're working at, or maybe you're working from home, the city, the town, however you want to define that. But where are you joining us from today using the Q&A feature? Please let me know, where are you joining us from today? Okay, wonderful. I see someone joining from BIDMC Boston, BIDMC, a lot of BIDMCs. Thank you so much. This is the same way. If you have any questions throughout today's presentation, if there's anything that I can clarify, know that you can use the Q&A. Someone's joining from Needham. Thank you. So just continue to use the Q&A throughout today's presentation. Lexington, thank you. Out of Boston. Thank you. So yeah, just continue to use the Q&A. I am here to help answer any questions you have. And if I don't know the answer, I will do my best to get that answer to you at a later point. Also wanted to let you know we are recording today's presentation. It will be available on our YouTube channel, which is youtube.com/myhvcu. But you can access all of our recordings there. And we will have a quick survey at the end, and that just to help us really improve the content that we're providing to you, make sure that we're covering the information that you want covered. So very quickly, about a little bit about us at the credit unions, for those that are not familiar. As I said earlier, we're Harvard's not-for-profit financial institution. What exactly does that mean? Well, we're the same as a bank in the sense that we have the same type of product. So we have credit cards, checking accounts, mortgages, RV loans, boat loans, savings accounts, student loans. But the biggest difference is that as a not-for-profit financial institution, the profit that we make, we literally give it back to our community, our members, and do a lot of good in the community, a lot of resources for our members and the community as a whole. So that's the biggest difference, is that not-for-profit piece. Anyone that's affiliated with Harvard, including all the different Harvard teaching hospitals, are eligible to join. And once you're a member of the credit union, you are a member for life, even if you change employers. I do want to say we do have a new branch that I'm super excited about. It is going to be on Brookline Ave. It is on the corner of Brookline Ave and Jocelyn's Place. So we're going to be on the sort of ground level of Jocelyn Diabetes Center, across from the Longwood Food Court, same block that Sweet Greens is on. So for those of you that have missed us, I know we've missed being over there. Our new branch is actually opening in a couple of weeks. Official date to be announced. I believe this week we'll be announcing it, but it will be open next month, November. And we are excited to be there. We'll be there Monday through Friday, and hopefully extending the hours at some point to include Saturdays. But enough about us at the credit union. I really, I appreciate everyone logging on early, and we have about an hour to go through our content today. So today we're going to talk about student loan repayment and refinancing. This is just one of the many different topics that we offer through our Thrive program. And Thrive is our financial wellness program, which we provide free financial counseling, we provide free workshops, blog, and all of this is available to all of you, regardless of if you're a member of the credit union or not. We, of course, would love to have you be a member, but we understand that, depending on where you are with your financial journey, you may not have a need for any of the current products that we have. So that's okay. We still want you to have good personal finance information and resources. So everyone has access to Thrive. It's hbcu.org/thrive. There we have a blog where we have a great amount of resources on student loans, and we keep those going. So we do about 3 blogs a week, and they're extremely timely. We do everything from student loan repayment, credit, budgeting, debt management, refinancing, home mortgages, a variety of different topics, scams, elder fraud. So if you have any curiosity on any of these topics, want to take an online educational course that's free, short to take, can head over to Thrive and have access to those resources. And those are available to you and anyone in your household as well. So it's always good to sort of spread the educational wealth, if you will. Last week, or I think the week before, we actually had a national expert, Betsy Mayotte, come on and do a presentation for us that was 100% focused on President Biden's federal student loan debt relief program. That is actually on our YouTube channel, and I will not be covering that information today because Betsy is really the true expert in the matter, and she went into very, very good detail as to whose loans could be forgiven, what to do if you're not quite sure. And you can access that. It's on our YouTube channel right when you go to our YouTube page, which is youtube.com/myhbcu. And you can access that presentation at any point if you have specific questions on their student loan relief program. So again, we won't cover that, but we do have that information on our YouTube channel. I saw that there was a question about the YouTube channel link. The link is in the chat and it's also on this page. So youtube.com/myhbcu. Okay, so let's talk now about sort of the general student loan repayment as a whole. So when it comes to student loan repayments, there are a couple different steps that we're going to cover today. And we're going to break down each of these specific steps. But overall, I want to just start us off. What are we doing? What are we going to cover? So first, we need to understand what student loans do we have? What are our repayment options? Can my loan be forgiven? Can it be discharged? And then if not, or even if it can, what refinancing options may be available to me? So we'll dive in and start talking about these different types. So first, we have 3 sort of buckets, if you will, of student loans. You have your federal student loans, and these are the loans that when you applied for financial aid, and I will be presenting assuming that it's you as a student borrower, but I understand that some of you here may be parents that borrowed for the students. So just be mindful that when I say you, I'm referring to student loans, but that could also be if you're a parent. I know you may have borrowed plus loans for them, for your students. Now, with the federal student loans, these are the ones that the student would have completed the FAFSA, the free application for federal student aid. These federal loans include subsidized and unsubsidized direct loans. It includes the plus loan, which could have been for the parent on behalf of the student, could also have been a graduate plus loan. So a graduate student borrowing that loan for themselves. The federal student loans, these are the ones that right now have been in the news about that possible federal student loan forgiveness, in which up to $20,000 of federal student loans could potentially be forgiven. And that is information that you can just go to studentaid.gov. And you can also go on and watch that webinar that I had mentioned earlier. But all of the news around the student loans right now, that's all federal student loans. So plus, Perkins, subsidized and unsubsidized loans, formerly known as Stafford loans. Then you have state loans. State loans vary. Some states don't even have state loans anymore. Some states may have had them in the past, maybe when you borrowed. Those are going to be different category, and that information for the state loans won't apply to like the federal loan forgiveness or federal student loan repayment options, which we'll go over. And then you have your private student loans. Now, private student loans basically are any other loan. So let's say if you borrowed a loan with us at the credit union or any other nonprofit or not-for-profit, even though it's a not-for-profit, it is still a private loan because it's not through the federal government. It's important to know the differentiator because many times, I know for us, as a student loan lender, we've been getting a lot of calls of people asking, well, will my loans be forgiven with the credit union? And unfortunately, everything that is happening right now only applies to the federal student loan. So all the different loan pauses on repayment, the potential $10,000 to $20,000 loan forgiveness, all of that only applies to the federal student loans. If you have state or private loans, that does not apply. Now, with the federal student loans, another way of thinking of these, if you have federal student loans and you haven't had to make payments since 2022, those loans have been paused. The federal loan repayment has been paused. You were not required to make loan payments. That pause has been extended multiple times, but right now, supposedly the last extension ends December 31st, meaning that if you haven't made any payments on those loans, you are not expected to make payments until January. But potentially for some of you here, you may have $10,000 to $20,000 of federal loans forgiven, which means that you may not need, hopefully, to make payments. So let's say that my federal student loan balance and that I qualify for this debt relief program is $10,000. I'll just keep it real simple. If it's $10,000 come January, if things go according to plan, but as right now, everything is on hold with the federal student loan debt relief program because of the government is being sued, whether or not the president could have made these changes. So right now it is on hold, but assuming everything clears and that debt is forgiven, student borrowers that had $10,000 left would not have to make that payment come January. If you made payment during this time period, so from March of 2022 through December 31st, 2022, March 2020 through December 31st, 2022, if you made payments that were not required, you can actually contact the servicer who is the holder of your loan and ask for them to provide you a refund of that payment. This may be especially important for those that perhaps made payment, may need funds at this moment, and that is an option. For some people, it may make sense. For some, it may not. But that is something to be aware of, that if you did make payments when you were not required, you can actually contact the servicer and they have to provide you a refund of that payment that you made. I recommend the main place to keep up to date with federal student loan information is studentaid.gov. The federal student aid website, or FSA as it's sometimes referred to, this is the source of federal student loan information. So anything that you see on any news outlet, another blog, they're getting the information from federal student aid. This is where they're making the announcements as to what is happening, what are the changes, and this is where you can get the information directly. For those that believe that you may qualify for that $10,000 or $20,000 federal student loan forgiveness, just go right now. I'll put it on the chat. If you haven't, just go to the student aid website. There is a quick form that you can complete it's very basic. It asks, I believe, for your name, first name, social security, like very basic information. And that will sort of prompt or will put you on the list if there is anything that you may need to do. But that's a very simple page. You could just go straight to studentaid.gov. It takes like 2 to 3 minutes. It's I think they ask like 3 or 4 questions. It's not a lot, and it's very quick to complete. Now, keep talking about these federal loans, but what exactly are the federal loans? How do you know if you have them? There are a couple of ways that you can find out if you have them, and I'll give you the websites shortly. But for those that may have, depending on when you graduated or when you attended school, some of the loans that you have may have been called Stafford loans or federal direct, subsidized and unsubsidized loans. So again, these are the ones that you would have completed the FAFSA. These were the ones that no credit check was required. The subsidized loans, that interest was being paid by the government while you were enrolled at least half time. These were the loans that were deferred at least 6 months after you stopped being enrolled at least half time or graduated. And then the rates are going to vary. And this is where it can get a little bit confusing with federal student loans because you don't just have one rate. If you attended school, let's say 4 years undergraduate program, then you would have had direct subsidized assuming you qualified, you would have had direct subsidized and or unsubsidized loans. And that means you, instead of having four loans, one for first year, second year, third year, fourth year, you actually would have had, if you had both subsidized and unsubsidized, you would have had 8 loans, because there's a maximum that you could receive in subsidized and a maximum you could receive in unsubsidized per academic year. So right there, my first year, my freshman year, I would have had 2 loans. By the end of the 4 years, I would have had 8 loans. So 8 loans at potentially 8 different interest rates. And this is where it can sometimes get a little bit tricky, which is why it's important to sort of know that you can check your interest rates, and I'll show you where you can get that information. Now, in addition to the unsubsidized direct the unsubsidized and subsidized direct loans, there's also some of you that may have a plus loan. And the plus loan, this would be specifically for the parent. So if I, as a parent, borrowed for my child, I would have borrowed potentially the federal plus loan. This would have rate also would have been dependent on what year I borrowed it. It's not a set rate for all terms. They change the rate annually. The graduate plus loan, that would have been me as a graduate student, which is a very common loan that graduate students borrow. So if you did attend graduate school and borrowed through the federal government, most likely, probably was the graduate plus loan. That's typically what most graduate students will borrow. Not all, but most. For your private student loans, it gets a little bit trickier because it's like credit cards. It's going to be based off which company did you go with. So if you have an American Express, even within, let's say, an American Express, there's so many different types of cards that they offer, and each card has its different rate, different benefits, if you will. Similar concept when it comes to a private student loan. If you borrowed a Chase private student loan or Discover or an HUCU, the terms of those loans are going to vary. Right now, a lot of focus is being put on the federal student loans because those other ones that we're hearing all of the potential benefits, the cancellation, public service loan forgiveness, which I'll get into shortly. But with the private student loans, there isn't really much that is changing with these, or that will most likely change, because they were set by companies and they don't have the ability, if you will, to do massive forgiveness as the federal government does. So for a lot of the private student loans, what will happen in the next couple of months, most people that are paying private student loans probably will continue to pay their private student loans. You cannot take a private student loan and then bring it to the federal government. So if you have a private student loan, whatever you're currently paying or will be paying if you're currently in school at least half time, most likely will not change with everything that is happening in the news right now. There are a couple of things, though, that sometimes we may not always remember about our private student loans. And that is that if you borrowed a private student loan as a student and maybe had someone co-sign for you, so maybe that's a parent, a friend of the family, a relative, they may potentially be able to be released from that loan. Meaning, if I borrowed a private student loan with my mom and I've made a number of consecutive on-time payments, I could actually contact the lender and ask to have my mom released from that loan. The benefit for my parent would be that they no longer would have this loan impact their credit score. They would have that credit history, and hopefully it's good because of paying on time, but it would no longer have a direct impact on their credit score. This is something that, especially if for parents or co-signers that are perhaps older or trying to approach retirement, or maybe trying to buy a house, or any major credit purchase, sometimes it's beneficial to release them from the loan so that they don't have that additional debt on their credit report, which could sometimes negatively impact them if they're looking to borrow additional debt. So it's something to keep in mind for parents that are on this webinar. If you co-sign for a student, a child, see if it's something that maybe you can be released. It could only become their loan and you no longer would need to be responsible for it. Also, for anyone that does have a private student loan, make sure that if you're signed up for auto payments, if it's feasible for your budget, the benefit of the auto payment is that most lenders are going to offer a 0.25 percentage point, 0.25 discount on your interest just by signing up for auto payment. This means you set it, forget it, and you're getting that discount. May not seem like a lot, what's a 0.25 percentage? But with most student loans, the amounts that we borrow are pretty significant. So that quarter of percentage point can save you hundreds, maybe thousands of dollars, depending on the terms of your loan and the amount that you borrowed. So it can be tricky to try to remember, well, what did I borrow when? Which loan is federal, which loan is private. So the main website that you can go to is studentaid.gov. This is the one that I have most recently put in the chat, so you can access it there. But with federal student loans, you can go to the student aid website, and here you can look to see all of the federal student loans that you have. If you haven't already, again, log on to it right now. This is your great opportunity. I'm assuming you're in front of a computer, or if not, you are on your phone. Log on. There you'll get the details about the potential loan forgiveness, but you also can log in with your FSA ID, which is your federal student aid ID. If you forgot it, no worries, you can reset it. But there you can see all of the federal loans that are under your name, the ones that you've borrowed. This would be applicable to both parent, if I as a parent have my own loans, and if I as a parent borrowed the plus loan for a child, so that you'll be able to see all of your federal loans. You'll see the rates, the terms, all of that information. Okay, I see a couple of questions that are coming in, and I will address them in the upcoming slides, but do keep having the questions come in, and I'll peek periodically and may delay some of them, but I will always answer them. So thank you for having those questions. With loans that are not federal, so again, your state loans, your private loans, those will not appear on the federal student aid website, which is, makes sense. Federal student aid, just federal student loans. The good thing about that is if they're the federal ones, these are the ones that potentially could get forgiven, either through the new President Biden's debt relief student loan programs, quite the mouthful, or public service loan forgiveness. If it's a private student loan, those do not qualify. So instantly, by logging on to student aid, you can sort of determine which could qualify, which would not. Your credit report, however, that's going to have all of the loans that you have, in addition to other debt that you have. So your credit report will have any outstanding credit cards that you have, any car loans that you may have, mortgages, any debt that you have under your name. Anything that you've co-signed, that will appear on annualcreditreport.com. You can go to this website, you'll see your federal student loans, that will appear here, and any other private student loans that you have. It will not impact your credit score negatively for you to pull your credit report. That is something that as a consumer, you have the right to pull your credit report from each of the bureaus. There are 3 credit bureaus, Experian, Equifax, and TransUnion, and you can pull your credit report once a year for free at this website. I know that it's a annualcreditreport.com. I know that it is not a .org or .gov, but it is the one that is mandated by federal law that the bureaus utilize. So annualcreditreport.com, that's another one to keep on the list and pull your credit report to see all of the student loans that you may have. So now that you have an understanding of, okay, these are the federal loans, these are the private loans, what are our repayment options? So for the federal student loans, you're going to have more of a library, if you will, of repayment options. So you have more choices available to you. There's been a lot of talks of possibly changing these repayment structures. However, as we've seen, we don't quite know what's going to happen until it happens. And then even if it happens, things may change. So this, I don't know when. I don't think they know. I think it's still up in the air, but there has been talks about changing these repayment options. The good thing, though, is that for right now, we know that these are the current repayment options. Anything that they change will usually be in addition to, and at some point wouldn't apply to new borrowers. But for those of us that have had these repayment options, they tend to be available. Now, there's the basic repayment options, and these are, let's say that I borrowed, X $1,000. I'm not even going to give it a dollar amount, but I borrowed X $1,000. Now, if I pay the same amount for 10 years or 120 payments, and that's going to be important in a little bit, but if I pay this loan off in 10 years or 120 payments, then I'm going to pay the same amount each month. That is the standard repayment. That's typically how most installment loans work. So your car loans, your mortgages, assuming it's not a variable interest rate, for the most part, you pay the same amount until the loan is paid off. That's why they call it standard. Graduated is a little bit different. It means that every 2 years, that monthly payment will increase until it'll still be paid off in 10 years. But let's say I could start off with like a $200 payment, may end up with a $400 payment in 5 years down the line. Every 2 years, that payment increases so that in a 10-year period, I can pay off that student loan in full. Then you have extended. Now, the extended means that you have an extra 15 years, so that repayment could go out to 25 years. Then you have a series of income-driven repayment options. These are the ones that the federal government is looking at how much money do you earn each year, what's your income, and that is going to then impact your monthly loan payment. This is something that you would have to apply for each year because your income may change each year. So the amount that you pay may change every year. This is the area specifically that a lot of talk has been going into, possibly simplifying this, because as you can see here, even the names can be a little bit complicated. Income-based, pay as you earn, income contingent, revise as you earn, pay as you earn, income sensitive. So there are so many different types that really the takeaway here is know that you have sort of the basic, pay the same for 120 years, or 120 months or 12 years. Maybe I pay a little bit more during that 10-year period when I'm approaching 8th or 9th year or 7th. And then there are all these income-driven options. So regardless of your financial situation, there is typically a payment, that option that could fit for you. And the income-driven plan, it could be that based off your income, your monthly payments are zero. So that is also a possibility. It doesn't mean that you always are required to make a payment. It's based off of your discretionary income. And this is where, again, some changes have been made to potentially increase the allowance that you have for your discretionary income, meaning that your monthly payment could potentially decrease in the future. So these are some changes that are being worked out, if you will. Now, if any of those repayment options just don't work for you, you do have a couple of options. You also have a federal deferment. Now, federal deferment, this automatically applied while you were in school. So while you were in school, you were not required to make payments because you were attending at least half time. When you graduated or ceased to be enrolled, you got an additional 6 months. You can only use it once. You had that additional 6 months. So this is important. Let's say that I went for undergrad, use my 6-month deferment, then I go into graduate school. My loans will be deferred. My undergraduate loans would be deferred. But once I graduate grad school, I no longer get that 6 months deferment period for those undergraduate loans. I do get them for the graduate loans because I haven't used that 6 months yet. So just know you only get that 6 months once. So if I would have taken 6 months off during school and deferred my loans during that period and then graduated, I don't get an additional 6 months. It's a one-time only. You also have a forbearance option, and a forbearance option essentially gives you the opportunity to just pause payments temporarily. The piece with forbearance, which is a good option if the other options aren't, is that with forbearance, you are accruing interest. It could slowly increase the amount, or I shouldn't say slowly. It depends on how much you owe, but you could end up having a higher debt amount because that interest is accruing while it's in forbearance. And typically for deferment, that interest is not accruing for your federal subsidized loans. There are going to be times that life happens and maybe you miss a payment, and just wanted to point out that there are some consequences, some that are pretty significant if you do miss payment. And typically it's not like, I miss 1 or 2 payments, which it could happen, but typically it's if you miss substantial amount of payments, it will impact your credit score. But the one that I always want to point out is that government intervention. Because these are federal student loans, I have volunteered and helped individuals file their taxes through the IRS Volunteer Initiative Tax Assistance Program. And we've had clients, unfortunately, that weren't able to access their refund because their tax refund were being garnished because of the outstanding federal student loans that they had. I've also seen individuals that have had their uh, their their wages, garnished so that they would have a part of their federal student loan payment that automatically was just taking out of their monthly or weekly paychecks. So just being aware that that could potentially happen. Okay, so I want to take a moment. I did see a question that came in that's timely to what we're covering. Do you still get the 6 months deferment if loans have been on pause since you graduated undergrad? No. So once you get that 6 month deferment, you don't get it again. I will say what we currently are in with COVID is everyone is getting that deferment, but that is, it was an exception, a major exception. So technically, everyone is getting that deferment. You're not getting your 6 months deferment, if that makes sense. So the 6 month deferment is a one time, but if you have federal student loans right now and you're in that situation and already use the 6 months deferment, it's not that you're using the 6 month deferment, it's that you're getting the federal government deferment on the loans right now. So it's a different one. But once you use the 6 months, it's used once. You can't use it again, but you could ask for forbearance, and that is different. But it's similar concept where if you need more time, but that interest will be accruing. Okay, so now that I have an understanding of, okay, these are my federal loans, these are my private loans, what are my options? I always like to start with the forgiveness and discharge. These have actually been in the news fairly recently. And a lot, if you've seen outside of the President Biden's federal student loan relief program, there have been a good amount of federal student loans that have been canceled because the school closed or because it was unfair lending or predatory lending practices that the schools had. So there are possibilities that could happen. It's been happening recently. If you want to know more about those, you're more than welcome to go again on that student aid website. You can learn more about that information. But typically, it's not as likely that you'll have your federal student loans forgiven and discharged based off of one of these. And I shouldn't say that it's not likely. Like we did see closed school discharge, but the number of schools that closed, it's usually not that likely. Of course, if someone passes away, yes, their federal student loan will be discharged. If someone is totally or permanently disabled, they could apply to have their federal student loan discharged. So there are other ways that those loans could be forgiven or discharged. The one that is most popular and the one that we get a lot more questions about, understandably, is PSLF, and that is Public Service Loan Forgiveness. Now, this one is, I'm going to put the link in the chat so that you have it, but basically, if you go to studentaid.gov/PSLF, you're welcome to do this as I'm speaking so that you can familiarize yourself. If something jumps out and you have a question, you can feel free to ask. But PSLF, or Public Service Loan Forgiveness, is different. Okay, so I want to start off with that. It is different than President Biden's student loan for debt relief program. So this is different. And yes, you could do both. So there could be, let's say I have $40,000 in student loans and I qualify to have $20,000 forgiven. Now, let's say I qualify for that $20,000 forgiven. I still could qualify possibly for $20,000 forgiven under public service loan forgiveness. So it's not one or the other. You could potentially do both. For more specifics, I do recommend watching our YouTube recording where we had national student loan expert Betsy walk everyone through the different nuances. There's so many. So I don't, if you think it applies to you, it's a great thing to watch. You can pause it, take notes. Definitely on our YouTube channel. Now, this is again different from the President Biden's, what you're seeing in the news right now. The Public Service Loan Forgiveness, or PSLF, this is when you have, let's say, 50,000. That's a little. Let's say you have $100,000 that you borrowed. If you borrowed $100,000 and that was just not doable, understandably, it's a significant amount to be able to pay it off in 10 years, you may have gone with a different repayment option. And what Public Service Loan Forgiveness says is, okay, if you made at least 120 qualifying payments or 10 years of payments, but not necessarily consecutive. So you could have skipped a month, that's okay. But 120 payments that qualified, and I'll get into what that means. Then after that, the 121st payment could be, and everything else past that would be forgiven. Now, what exactly is a qualifying payment? A qualifying payment means that it has to be made on time, which the federal government defines within 2-week period. It also means that if it's a qualifying payment, it would not have been a standard repayment. And remember when we went through the repayment options earlier, a standard repayment was you take your debt amount divided by 120, every month you pay the same for 12 years. With PSLF, if you're on the standard repayment, in theory, you wouldn't have anything, you wouldn't have 121st payment. So you wouldn't have anything to be forgiven after that fact. So the qualifying repayment plans typically were the income-driven plans, because those are the ones that were more than that 10-year or 120 payments. Now, the other piece, all of these have to be applicable. The other piece was full-time employer. You have to have an employer that was full-time by a qualifying employer, which means a not-for-profit, nonprofit, including hospitals. So for those of you, all of you on this webinar, your employer is a qualifying employer, and it does not need to be the same employer for the duration of those payments. So meaning I could have worked at one hospital for 5 years or 60 payments, and then I could have gone to a different hospital for another 60 payments. Or maybe I worked at one place for 10 years, excuse me, not 10 years. Maybe I worked at one place for 2 years that didn't qualify, but then I went to another place. I don't, those 2 years that didn't qualify, I wouldn't be able to count them. But if I went to another employer, I could qualify those. Now, this is very tricky because there have been a lot of changes that happened recently. Now, the timing of this webinar is great because all of you here still have time to go on to PSLF, which is the website that you see here. I put it in the chat. And there is a waiver that you can complete that expires on Halloween. So October 31st, 2022. This waiver is very critical because I went through all these examples of you needed to be on this repayment. You need to have this type of employer. Only these federal student loans that were in the direct loans qualify. But because the program got to be a little complicated, to say the least, the administration decided to essentially make exceptions for people that normally would not have qualified, even if you had applied in the past. So that means some of you here may have been applied for PSLF, you thought you didn't qualify, and maybe gave up on it. Understandable. A lot of people did. But the administration decided that through October 31st or Halloween, next week, Monday, you could get, there's a waiver that essentially makes it that some of the loans that didn't qualify before now qualify. If nothing else, that would be the one takeaway that I have, because this is the most timely one. This is, again, Monday, Halloween, last day. If you haven't already gone on, do this right now. Go onto the PSLF website, see if you qualify for that waiver. It is, you'll see on that website all the details. So all of the information will be in there, but basically you have to complete that form through, before the 31st or by the 31st. Okay, I see a question that came in. BIDMC is offering us a loan management service through tuition.io that we can apply for PSLF program. Should we also upload our PSLF form to Mahola aside from tuition? I would, you know what, I would do it separately just to be on the safe side. Like on the safe side, I would just, it's so simple to do just to go on, especially for the waiver, because the waiver that is October 31st, just go in, do it today. You know that it's done. Yes, they, definitely, I'm glad that BIDMC is offering additional resources, utilize those as well. But this one, because it is October 31st, I wouldn't want to rely on someone else and maybe they don't get it done in time or the systems. Like, this is simple. You can just do it yourself. Oh, great question. Someone said, do you need to do multiple forms if you have 3 children with loans that are attached to your name? So all of the federal loans that are attached to your name, you would only need to do one form or go through one process for your loans, but the children would have most likely their own loans, especially their, if depending, but they may have their subsidized and unsubsidized loans that are under their names. So they may need to do it for their loans that are not like the plus loan. Like the plus loan, that would be under your name, that'd be your loan. That would be a form you complete, and it would be, consider all of your federal loans. But for any loans that they have under their name, they would need to complete the form. Oh, good question. Okay, someone said, does the waiver still work if you are still in process of consolidating your FELP loan into a direct consolidation loan first? So actually the waiver, and I can't get into the specifics of it because I don't want to say the wrong thing. So I won't get into the specifics of it because it's very, very technical. But part of the reason that the waiver or the exception through October 31st went into play was that before the direct loans, which are called direct because it's directly from the Department of Ed, studentaid.gov, to the students. Before that, there were private lenders that could lend those loans on behalf of the Department of Ed. That is what this member or this participant referred to as FELP. I forget what it stands for, the acronym right now, but the FELP loans are when there was a private company that was lending on behalf of the federal student government. With PSLF, those loans that were through private companies were not eligible for public service loan forgiveness because it would not, they didn't have the records, if you will. Like it wasn't, they weren't eligible. But with the waiver, they did make exceptions to have some FELP loans that could potentially be eligible now. So a very long way of saying yes, still complete the waiver, even if you are in the process of consolidating. Because with the waiver, the good thing with the waiver is you're submitting it. Worst case, if you're not eligible, they'll get back to you and say you're not eligible, but at least you submitted it. Because if you don't submit it, you don't get that opportunity. So I would still consider submitting the waiver. Okay, and someone asked to clarify which form. So it depends. So I would say, which form do the children's need to complete? It depends on the children's specific situation, but the waiver specifically that's on this page that expires on October 31st, that would be the waiver that they would need to complete by Monday if any of these situations are applicable to them. So I can't say, yes, they need to complete it for sure because I don't know, but I would say go have them, your children, yourself, go onto the PSLF website, read the specifics, and then determine, do I need to complete that form by October 31st? As for the federal Department of President Biden's federal student loan debt relief program, that's a different form, and that one is also on studentaid.gov. And you can, again, read the specifics, but that one isn't timely, so you're still good. Okay, someone submitted a question. I had a Parent Plus loan through Navion, which is one of the servicers. Over 10 years ago, I spoke with them and it was told it has to be an educational loan and I would need to refinance first to qualify. Yes, that's a perfect example of something that a lot of people heard. And because of that, that is why this PSLF, Public Service Loan Forgiveness waiver, was created. And that's the one that I would say, complete the waiver. And it's true. When you made that call, that's true. It wouldn't qualify. But because of this exception, it may be that now it does qualify. So I would, if you ever received a no in the past, go onto PSLF, complete that waiver by October 31st. Just do it today if you can, pretty quick. That way you have that information available to you. I'm going to put a link in the chat now because I'm getting a lot of good questions and I won't be able to maybe answer all of them, but I want to give you a resource where you, and I apologize because I'm typing and I don't want to get this wrong. So a little awkward pause for a moment. Okay, so I just put a link in the web in the chat. If it doesn't work, please somebody let me know through the Q&A. But it's for TISLA, TISLA, and it's freestudentloanadvice.org. This is the organization that we had that came in 2 weeks ago to do the presentation with Betsy Mayo that went over the student loan debt relief program. It's a free resource. They are a nonprofit. They are qualified. They are experts in the industry. They can answer your specific questions. It may take a couple of days depending on volume, but that's another great resource. So if you have very specific questions, just reach out to them. We know the people that run this business. We know the people that the founders. They are a great organization. And if you want to hear what Betsy say, who's the founder of this organization, you can watch the other recording on our YouTube channel. And someone asked, is PSLF only for public service? That is correct. Public service is only for federal student loans. Thank you. Okay. So the link that I put in the chat is for TISLA, which is I forget what the Institute for Student Loan Advice, I believe it stands for, but the website is freestudentloanadvice.org. So I did put that in the chat. Thank you. So if your loans do not qualify for federal student loan forgiveness through President Biden's forgiveness loan program, if it doesn't qualify for public service loan forgiveness, then you may want to consider refinancing. Refinancing is when you take the loans that you have with a private company or even with the federal government and bring it into a private lender. One of the questions that we received is it possible to have a federal loan originally, then get consolidated to a private loan? So yes, it could have been that a lot of people, myself included, I did this when I had my federal student loans. I did refinance them because I was at a point that I didn't qualify, and the rates were so good that I was able to pay it off sooner by refinancing. But that wouldn't make sense in this environment right now because there's loan forgiveness. So right now, it's not necessarily the time for most people to refinance federal loans into and make it a private loan, because once you take that federal loan and you take it from the federal government to a private organization, and private meaning outside of the federal government. So if you take it to HUCU, Chase, Capital One, any of these, you lose all of those federal benefits. Think of it as if you live in a house, it has an amazing porch, backyard, whatever it is, something that you love about that house. You move out, you can't go back to that house and use that benefit or that part of the house that you loved. You no longer are eligible for those benefits. So if you have a federal student loan, now it may not be the time to refinance because you don't know if your loan could be forgiven, if there are going to be new repayment options. But there may be situations that, and this doesn't necessarily apply to all of you because I know you work within BIDMC, but maybe there's someone in your household that does not work for a nonprofit. Maybe it's someone who doesn't work, who is a high earner and they don't qualify for income-based repayment, and they're not going to qualify for a forgiveness program. That in that situation, it may make sense to refinance. So it really sort of depends. And I'll give you another resource in a couple of slides that you can call and they can help you sort of identify, does it make sense for me to refinance? Now, why do people refinance? Well, typically you're going to get a lower monthly payment because the rates tend to be lower. You also get one bill and one interest rate versus having multiple loans. So at the beginning, I mentioned if during undergrad, you had subsidized and unsubsidized loan, instead of having 4 loans, you would have had 8 loans for that undergraduate period. When you refinance all of those 8 loans and any loans that you borrowed in graduate school as well, you could do this. They would be now one loan. You're consolidating. Think of it as multiple little snowballs that you have, and then you put them all together into one big one. That's really what sort of refinancing all of those loans, that's what it does. There are no application or prepayment penalties. And that's important with prepayment because if you are in a situation in the future that you are able to pay off your loan earlier, you want to make sure that you can do that and not be penalized for it. There is something known as federal consolidation. And I saw a couple of questions that mentioned federal consolidation. So what a federal consolidation is is taking the loans that you have with the federal government. So again, I could have undergraduate loans, I have graduate loans, I could have my own loan that I took out as a parent, and they're all within the federal government, but they're all multiple loans. I could take all of those and put them into one. Before, that was necessary for some loans to be eligible for public service loan forgiveness. So that was one of the questions we received earlier, like, well, I consolidated them. Does this still qualify, or do I need to consolidate? But because of the waiver through October 31st, some loans don't need to be consolidated right now. But again, that's only through Monday. So, we have a short time period here. If you haven't completed that waiver. Oop, thank you. And someone submitted a good point, and thank you. I'm getting to that point, but with consolidation. So remember that with refinancing, you lose all of those benefits. So if I like the backyard that I had in this house, move out, I no longer have access to those. If I refinance from the federal government into a private loan, I no longer have those benefits. With consolidation, even though it's within the federal government, it could reset the clock on those 120 payments for public service loan forgiveness. Now, I say that it could because that waiver, again, this waiver, October 31st, is kind of like swept everything underneath it. But it could be that you could potentially have some of those previous payments that didn't qualify, not now qualify. So that is another reason to, if you think you may be eligible, just complete that waiver. Look on that PSLF website, which is studentaid.gov/PSLF. But historically, yes, it would reset the clock. I don't know. There was talk about potentially not having a reset the clock anymore. I don't know where they landed, but that would be something I would suggest going onto the PSLF website and seeing if it would impact your specific loans at this point. Couple of things to consider before refinancing. I talked a lot about the benefits. That's really important. You lose all of those benefits. So again, right now, not the time that we would recommend to refinance your federal student loans because, well, in your situations, if you think you could qualify for public service loan forgiveness or President Biden's student loan relief program or the PSLF waiver. So there are so many possibilities of having loans forgiven that right now may not be the best time to refinance. Give it a couple months. Let's see what happens. If then you don't qualify or you have some loans forgiven, and it's very unlikely that this will happen again. So what most people are thinking is once those loans are forgiven, then some people are thinking about refinancing the remaining balance. Yeah, I think that's a conversation or a consideration for months from now. But for right now, probably want to stick with the federal government. This is another resource that you all have access to, and I'll put this one in the chat as well. But you can go to our website /greenpath. So it's hgcu.org/green, as in the color, path as in a pathway. And these are counselors that we partner with. They are accredited credit counselors. They provide budget counseling, federal student loan counseling, debt repayment, a lot of different counseling. It's free to you because we pay for it. We believe in the importance of good access to good information. And that's another benefit of being a not-for-profit financial institution that's focused on doing what's right for our community. So you have access to this. Even if you're not a member of the credit union, we would love for you to be a member, but even if you're not a member, we're not going to withhold this information. So give them a call. They're a great resource and they can help figure out some of the specifics. Okay, somebody asked, how would I know if the hospital that I work for is considered nonprofit? Most of the big hospitals are. What I've heard from some of the partners that I've worked with in the medical field, and someone feel free to add if you know your specific situation or have anything you can add to this to put it in the Q&A. But most of the hospitals that you work for, including within the BIDMC systems, would be considered, we'd qualify. Like I know Harvard as an employer, we qualify for not to have the loans forgiven through PSLF. However, I know for specifically, I have spoken to radiology departments, and they've said that, well, technically they're not part of the hospitals, they're outsourced through a private company. So that in that situation, that private company wouldn't qualify. So it really ultimately goes back to who's your employer, who's your technical employer. So if you're consulting or employed by outside of the hospital, but work in the hospital, you may not qualify. But if you're within the hospital, you typically do qualify. And I don't know if somebody that's on within the BIDMC system, if you know if there's a specific page within your intranet or a place that I could put in here for the chat as a resource. If not, you could probably go and check with the HR office and they'll know which resources you would need to complete. And then very quickly, I just want to show a little bit about repayment strategy and just showing you that if you do refinance, or even if you don't refinance, just knowing that, well, if you refinance, bringing down your interest rate, it does help because it will help you save money. And this is not just for federal student loans. This is just in any type of loans that you have. Rates are high right now. Hopefully they do go back down in the future, but something to keep an eye on, especially if you're going to be borrowing during this higher rate market. Know that when the rates go down, refinancing could be an option, and that could help save you money. The other piece, especially for your federal student loans, once you are back in repayment, is if you don't think you'll qualify for public service loan forgiveness, is paying more than what the minimum amount is. That can also help you save money in the long term. We have a good amount of resources on our website. I also want to put really quickly the link to the survey. And I do see a couple of questions that are coming in, so I'll make sure to get to those shortly. But I do want to put in the survey. Please let us know if there's anything we can improve, anything else that you'd want us to cover in the future. I did give a lot of information. So top things that I would recommend: go to studentaid.org/PSLF. See if you qualify for that waiver for public service loan forgiveness. The deadline is Halloween, October 31st, upcoming Monday. Complete that. Second piece would be go onto our YouTube channel, youtube.com/myhbcu, and watch the Understanding President Biden's Student Loan Relief Program video. It's a very wordy title, but it's a very wordy program, so it was hard to kind of make it shorter. But that was posted about 2 weeks ago, and it is presented by Betsy Mayotte. A lot of good information about the current forgiveness program that you can have $10,000 to $20,000 forgiven. So I think those would be the biggest two. Did have to put in a disclaimer here. I don't know everyone's specific situation. Provided resources, I hope that you'll take those next steps to know what is best for your specific information. You can also contact TISLA, TISLA at freestudentloanadvice.org or GreenPath at hbcu.org/GreenPath. All of these links are in the chat, and they can provide free federal student loan counseling based off your specific situation. I have a couple of questions that came in. I'm going to look at time. I think some of them. Okay, yeah, I think there's a question that came in about the waiver and do the children need to complete it or not. I actually would recommend maybe contacting TISLA directly for that one, because they can give a lot more specific information. And with the remaining time, I know I won't be able to hit that, and I don't want to get the information incorrect. So I would suggest contacting freestudentloanadvice.org. Okay, somebody asked, is it correct that you have to be in a specific student loan repayment to qualify for loan forgiveness? My current repayment plan does not qualify, but it seems as if the repayment plans that are eligible have a much higher monthly payment. So it is correct that technically you needed to be in a specific loan repayment plan, but with the waiver that expires October 31st, it could be that payments you made prior that did not qualify do qualify. So for this person, I would say, and anybody else, if your payment plan did not qualify before, go on to the studentaid.org website /PSLF, look at that waiver before Monday, complete it, because it could be that some of those prior payments now qualify. Someone asked if the PSLF form was already submitted through tuition.ios. Do I recommend submitting it directly? No, I would think if you did it through Tuition iOS for public service loan forgiveness, that's different than the waiver. So I think I would actually contact tuition.io and see what did they submit on your behalf, because right now there are multiple forms, but the waiver, that one's through October 31st, and that one is for any payments that may not have qualified before. And I don't know if they could do that one for you, but that is different than the PSLF employee verification form, which I think that's probably what tuition.io is probably doing. But I think for anyone here that does have a question like, well, do I need to do this? Just contact tuition.io, because I don't know what they completed on your behalf. And they should know if they'll know what they completed on your behalf. And if there's something else like the waiver, PSLF waiver that is through October 31st, if you need to do that, which it's very simple. So you should be able to do that one online, but I don't know if they do that one for you. I want to thank everyone. I know we're at time, a lot of good questions. I really appreciate everyone taking the time to submit the questions. This presentation will be available on our YouTube channel. It usually takes us a couple of days to upload it, and then we'll send an email. However, feel free, if you'd like, you can just subscribe to our YouTube channel, which is youtube.com/myhbcu. And then you'll get, if you click the subscription, and I think it's the bell, then you'll get notified once we upload it. But regardless, we'll email you. But thank you so much, everyone, for joining. Remember, 3 things: check to see seriously, student loans. So many websites in my head. I'm so sorry. Go to studentaid.gov/PSLF. You have until October 31st to complete that waiver in case you didn't qualify before. Maybe now you do. And then on our YouTube channel, watch the recording for the public service loan relief program, or public relief program through the federal government. And that is on our YouTube channel. Thank you so much. And I hope everyone has a wonderful rest of your afternoon.